Welcome to another episode of John McEntyre Show Live. John McEntyre. The show is dedicated to your financial health and wellness. And today I have a good show signed up. I have a question I'm going to not ask. I'm going to answer it. But before we get into that, today is Thursday, November the 7th, 2024. We're moving along into the month, first week of the month of, I call it my Thanksgiving month. Because I'm thankful for a lot of things. I'm showing, I'd like to practice a lot of gratitude every day, but especially this month because the big meal season is here. The Thanksgiving, and then we're going to Christmas. All of the goodies are coming down the pipeline, and so that automatically gets me grateful. But in in today's show, I'm going to be answering a question someone asked. You know. Is it okay to make an extra payment on my mortgage? And so I'm going to answer that question. But before we get into that, we have some wallet wins. And I also wanted to bring up something that was very interesting. Since 2021, I saw this article. Since 2021, well, it was an article. I actually saw it on television, uh, uh, a segment on television. It was since 2021, over 6 million people have went back to dumb phones. Um, and when we say dumb phones, most of them they're the flip phones. They've gone back to just the old school flip phone, and there's a couple of newer phones out that do very minimal activities. Basically text, email, phone calls. That's it. Uh, some of them they're a little bit more. They have like maybe a social media or what social media app or two on there, and that's pretty much it. No games, none of that stuff that would cause you to just sit and scroll. So that was mainly the reason why the it's a couple on the west coast of California started a company, and they said basically they were becoming antisocial behind their phones. The husband said that he would be at work dinner parties, and he would catch himself sneaking off to the other room just so he could like get on his phone. And the wife was like, 2 hours every evening after work was basically before bed was basically spent just doing what they call doom scrolling, just holding the phone, just she was like opening up each app and just scrolling and things like that. And so they were like, we're like scrolling our lives away. These phones have consumed our lives. And so they came to the conclusion, and they asked themselves, how would it be if we went back to the old school phones? And so it slowly in 2021, it was like, and they started this company where people, you can buy these particular phones. 2021, like 1% people went to the dumb phones. Call them dumb phones. I don't know why. I guess the opposite of smartphone. That's the reason why. 2022, it doubled to 2%. Now it's up to 6 million people. It accounts for 6 million people have went back to that old school dumb phone, for lack of a better term. So I thought that was very interesting, and they said that their actual costs have went down, which I figured that would happen. They were like, we don't need as much data because we're just making calls and a few texts, checking the email. That's it. So the data plans went down and everything like that. But the main thing is they got back their time, because that is one of our most valuable possessions, if not the most valuable possession. Our life is one, time is the other. So all the other things really don't mean much, and also your health. Other things kind of pale in comparison to those, the big three. Your time, health, um, and the other one I said. I'm just moving too fast here. But let's get into this. Let's share some of these wallet wins that I received. I'm receiving a ton of them, but the first one is a very good one. I'm a single mom, and I started a weekly financial study with my two kids. We are learning about money together. You cannot beat that. You cannot beat that. That's like that's like a generational wallet win. Some wallet wins, they all wallet wins are important. Some of them, every now and then, one that you do, it is going to really make a huge difference, and that's changing the generation. That's accelerating, wealth and everything, because if you have two kids and you're in your 30s, for instance, and you're just really learning about money, and they're not even 10 years old yet, 6, 7, 8, 9 years old, just look at the trajectory. So they're going to be in a totally different place, because of this weekly financial study program. um, so you cannot beat that one. I celebrate that one big time. Wallet win number two: just rolled over an old 401k plan from a previous employer. Yes, I've gotten a lot of those. I did a show about that back in the summer, and I've been getting a lot of those wallet wins, because it is, you forget about a 401k plan or a retirement account from a previous employer, and a lot of people have been saying that one was actually better than the one they're in with their new employer. Um, Not by much, but it is, a little bit better. So the rollover actually is a big, a big thing. Or, however they choose, they may let it just stay like it is, or they may roll it over. But that is a wallet win. And anytime you find money, that's a wallet win. Wallet win number three: I'm making some good side hustle money flipping cars with a friend. And that is a wallet win that I can definitely agree with. I've done a couple of those. Someone had asked me years ago, they were wanting to get started, fixing up. It was basically fixing up old cars, and reselling them, going to the classic car shows, things like that. And then it just turned, I was like, you make good money doing that, but a more consistent money would be flipping everyday cars. And that's when, doing the classic cars, he was making, you know, still wasn't bad. Maybe $20,000 every 6 months or so. So it was around 40. He was making around 40,000 a year, and this was his side hustle. He had a very good job. He was in corporate, so he already had a very good job, and he was just wanting to have his own thing. Well, now he's out. He's been out of corporate few years, quite a few years, not a couple, quite a few years, and he went over. As we talked about it, I said, if you get into that middle market where those everyday cars, those reliable cars, flipping Hondas, the Toyotas, things like that, those Nissans, those well-built, reliable cars that will run forever, you can make a very good. You could turn that into a very good business. You can actually scale it much better, in my opinion. Um, which he did. He's over. He's well into the 5-figure monthly income. Profit, making a profit, and it's a group of them. They're doing it, so that is a very good side hustle there. You can make some good money. Most people just think, when they hear flipping, most of the time they just think of flipping houses. There's a lot of things you could flip. There's people there, they're flipping products on. That's basically what eBay is. You're flipping products. So some people, it's a guy I like to collect watches. So it's one particular guy. I've been watching him, and I bought one of my first watches, antique classic luxury watch from him. Uh, eBay was a kid, put it like that. It was, oh my goodness, it was 2003. I think it was 2002, 2003. And I saw him, and I liked the watch, called him, and we talked more and more, because I wasn't quite ready for this eBay thing. Then I talked with one of my brothers, and he had actually bought a classic car that way. Uh, and I was like, okay. And he was like, yes, you could trust them, and talk to the guy, ask him these questions. And so he guided me through it. And I was like, oh, okay, cool. So ever since then, this guy, and he's like, he went from selling a few watches a month, and now he has a full blown brick and mortar uh, jewelry store. But then he had to go into others, because people started selling, antique and very valuable other pieces of jewelry, bracelets, rings, necklaces, brooches, things like that. And so, flipping is a very good and scalable. That's one of the big rules of business and having a company is getting it to scale. And so if you can scale it, that's when you can make the serious money. So we have three good wallet wins there. Um, Making some good money, flipping cars, rolled over a 401k plan from a previous employer, and a single mom who has started a weekly financial study with her two kids, and they're learning about money together. Excellent wallet wins. I love it. All right, let's get into this question today. This question basically is it okay to make an extra payment on my mortgage? And the short answer is yes. That's what, if you want to pay your mortgage off early, that's the best way to do it. Um, but we have to get into it there. Before I even talk about, some of the ways you can pay off your mortgage, how to do it, the best way to do it, it's some other things that should be in place first, because the mortgage, and the reason why I say that, the mortgage is usually your largest, the largest amount of money you will borrow on a home, especially borrowing it on a home. So it's usually the largest, and it's usually the cheapest money that you borrow. So there's other loans, make sure you want to pay out. Let me say it like this. You want to make sure to take care of other debts, pay off those other debts, because most of the other debts, mainly credit card, if you have automobile debt, personal loans, they're usually going to have a higher interest rate than your mortgage. And so I would say you want to pay those off first, and mainly that's what's going to free up the money to make the extra mortgage payment. Because a lot of times when we're helping people, we look at the financial situation and we decide it's time to, let's get rid of the debt first, and then it frees up a lot of money. Then they can apply it to the other debts. And you heard that's the debt snowball, or you may use the debt avalanche, where you pay off the highest interest rate first. Debt snowball, where you pay off the lowest amount first and go from there. So you want to make sure that those debts are paid off. Handle the foundation first. Home ownership is the foundation of wealth, but it doesn't have to be a paid off mortgage. Once the mortgage is paid off, then you really get into some serious wealth building. But even before that, there's other things you should take care of, because the mortgage is usually your cheapest money. Um, Insurances. You want to make sure you have all of your insurances in place, because you're paying all of this off, and you have one bad accident or lose a job, things like that, maybe pass away prematurely, something like that. You want your insurances in place first, your health, your life insurance, your disability insurance, home and auto insurance, your umbrella policy to take care of, things. So you want to make sure all of those foundational things are taken care of. Most people, they get sort of focused on paying off the home, getting out of debt, that they forget about those other things that need to be taken care of. That's foundational. And it was someone very close. He was paying off, got the automobile paid off, which was good. And he was just like serious about getting his house paid off. And I asked him, I said, so, and he was one of those, like everyone's a armchair financial expert. Everyone's a financial expert. If a person pay off a debt, or if they pay cash for something, that they think that makes them a financial expert. So he's giving financial advice to anyone that would get within 5 feet of him. And he was actually a barber. And so if you sat in his chair, you were going to get the financial advice. I paid off my car, and this is what you need to do, and everything. And then you need to pay off your house. And didn't ask my opinion. I didn't give it. Uh, Suddenly, in his 40s, passes of a massive heart attack. Um, let me see. One of his son's mother. They weren't married, but that was his son. Son was like pretty much he and Bella's the same age. He was 7 years old, I think, 6 or 7 years old. She had to start a GoFundMe. That's how I actually found out he had passed away. I was out of town, and I saw it was on Facebook, a link to a GoFundMe, and I was like, hey, that looks like the guy, and it was him. I was like, wow, he passed away. GoFundMe. I was like, all of this, he giving out all of this financial advice, and he hadn't even had his insurance in place. So his foundation, he was on a shaky foundation. So that's why I say, those insurances, you want to make sure and take care of those. Uh, then you want to take care of, like I say, the personal and consumer debt, your credit card, vehicles, things like that. You want to make sure you have your emergency fund, depending on what you're comfortable with, no less than 3 months up to 12 months. Living expenses saved. You want to make sure that your retirement accounts are maxed out, that you're putting the maximum amount that you can, every year, maximizing those. If you have kids, make sure you're contributing to their college funds. Their college savings is very important. All those types of things. Then you can actually get into the actual payoff of the mortgage, because all of those other things you've set the stage. Because if you're paying off the mortgage and you have all of this other money free, then sometimes you will always have extra money to make towards the mortgage payment. You won't ever have to shut that off. A lot of times people, they get into premature, they start paying, trying to pay off the mortgage, and then something happens and they have to shut it down to go over here to take care of this. Well, once you get all of that in place, now you can focus on paying off the house, if that's your dream house. I've always said that if you're not going to live in that house more than 7 years, if it's not your, everyone has a dream home or a particular neighborhood or something like that. If it's not where you're going to be for the long term, then there's no reason to pay it off. The only time you pay it off is if it's your dream home and you're close to retirement age, or you're in retirement. Some people say that don't even pay it off during that time. It depends. Most people that I talk to, they just prefer to have it out of the way, just take care of it, because they don't even want to think about losing their home or not being able to make the mortgage payments. They want everything when they go into retirement. Every dollar that they get, things have changed. They're in a different season, and so now we have health care, and they want the freedom to that's good money that could be used somewhere else, maybe to travel or do other things, live life now. So they don't want to be bogged down in their retirement years making debt payments out of their retirement income, things like that. Now, if they have a rental property or something like that, that's totally different. It's being covered. But primary home, you want that paid off. Rental properties, if you have mortgages on those and making payments, the rent should cover that if you're handling it correctly. So there you go. Now, getting to actually how to do it, there's many ways. Usually, um, the most common way is just an extra payment towards the principal every year. So if your payment is your monthly payment, that's everything included, it adds up to $1,300 a month, for instance. Then at the end of the year, make sure you say to the bank, lending institution, I'm making this extra payment principal only. All of this entire $1,300 is going towards the principal. And that there, for instance, that can knock 7 to 10 years off your mortgage there, just doing that. But then if you've paid off all of these other debts, and you have like a large amount of cash, or you see a windfall, something like that, just put it towards the principal, because that knocks down time and interest. I've seen people save hundreds of thousands of dollars in interest, and over a decade and a half off of paying. So those are the best. That's the way to do it. Sometimes people, they may be a little bit more conservative, and they say, okay, all this money that I'm saving each month, I'm going to take half of it, put it towards the mortgage payment each month, towards the principal amount. The rest of it's going to go into whatever, maybe purchase more insurance, maybe it's save more, or whatever they decide to do. They may decide to give more of their giving or something like that. But that's one of the strategies I've seen. But most of the time, it's just that. I've seen people make their payment, half of their payment each biweekly, which is really the equivalent of making one extra payment at the end of the year. So it's the same thing. Some people they rather do it that way. Um, uh, Most people, if they do it halfway, then they have some extra money that they put with it. And so, but I would just keep it clean and just say, yes, make the extra payment at the end of the year. Or if you have if you have quite a big chunk of money that you want to apply, then you can take that extra money and put it towards the principal each month. It's your choice. Some, if they look at things, they may decide to do a refi and just refi down to like they had a 30-year mortgage and they have maybe 20 years left. They may refi down to a 15-year if the numbers make sense. And this is where you can, there are tons of mortgage calculators online. So you can go in and just type in numbers, mortgage. You can Google like pay off mortgage early calculator, mortgage accelerator calculator, things like that. Or just talk to your bank. Maybe you're thinking of maybe doing a refi from, your 30-year mortgage to your 15, and just let them run the numbers. You can have someone to run the numbers for you. If you don't know who to talk to, contact us, give us a call or email, DM us, and we'll guide you to someone that will be able to help you there with that. All right. So that being said, I'm going to end it there. But my question of the day is not about the mortgage payoff. I'm going back to what I was talking about earlier about the dumb phone. And my question of the day is, could you survive with just a dumb phone? Could you give up that Android or that iPhone or whatever you carry for just a good old school dumb phone, the flip or one of the very basic phones? Could you live with that? That's a good question of the day to really think about. I'm going to answer here. I don't think I could. Not right now. I don't think I could do it right now. Um, some people I know that they could, and I've seen there's 6 million people doing it in America right now. They're doing it. More power to them. I'll let them have it. I'm going to have to stick with the smartphone or just a little while longer. So that being said, I hope I gave some useful information, some beneficial information, because that's why we're here. And share your wallet wins with us. Hashtag wallet wins. Send in those questions. And don't forget, you can contact me and you can actually ask your question live. If you have a question, you want to be on the show, you can live. If you know a very good financial expert that would make a good guest, uh, recommend it. Or if you are a professional, now that I'm actually welcoming guests to interview on the show now. And if you wanted to be on live, let's talk. We can do that. Uh, but that being said, I'm going to close there. So I will see you. Today is Thursday. I will see you tomorrow, Friday, same time, same channel. Have a good evening.